So the question should never be, did you win your trade? Or how much money did you make? The bigger question should always be, were you in sync with the markets? You see, being in sync with the markets allows you to fully be comfortable with your trading decisions. It also allows you to sleep well at night, knowing that per the market structure, you've given yourself the best possibility to have a successful trade. Being in sync with the markets is more than just winning trades. It's the underlying foundation of what good trading really is. Allow me to explain. So when you take a look at this Euro USD pair, and keep in mind we're on a daily time frame, you can see that this market has been in a downtrend. As a matter of fact, it has been in a downtrend for the entire year. So to take a buy position right here is counterproductive when it compares to being in sync with the market and what the market is doing. What a buy position does in this market, it gives you a lower probability of a good trade and a lower chance of having a successful trade. It's imperative for your trading psychology, especially if you are a new trader, to stay in sync with the market. I should say, stay in sync with the alignment and the overall trend or big picture of the markets. So the question also is, how do you stay in sync with the markets? Well, here's a simple trick. You can simply pan out to the larger time frames to understand where the market is going long term. In addition to that, you can incorporate things such as fundamental data, which is simply news, and learn how to read the COT, Commitment of Traders report, that comes out every week. This report tells you where the major banks are holding their positions on all of the major currencies. But if you only want to remain a technical trader, then panning out to the larger time frames should do the trick. So let me show you exactly what I mean. Back to the charts. So you can see right here, like I said earlier, we're in an overall downtrend on this market. Okay? Now, if you want to know if you're in sync with the market, although you see it clearly here, you can pan out to the weekly time frame, which will show you the bigger move in the market for the year, or you can pan out to the monthly time frames, which will also show you where the market is trying to go. And it looks as if the market is trying to go back to test this level of support, which is actually about 429, between 420 and 570 pips away. So that'll give you a good indication, a good idea of what the market is doing. Now that we are in sync with the market, now that we know where the market wants to go, let's look back over the past 3 to 4 months and find out where could we have taken trades in this market. Okay. So applying the new level strategy. If you would have taken your trade right here, set a stop loss position of 100 pips, you can clearly see how easy you hit your take profit. Again, being in sync with the market is what sets this trade up. Now, if you come all the way here, you have another signal to go long, to go short, with a stop loss of about 90 pips, right? Being in sync with the market sets this trade up also to hit the take profit. Here's another potential trade opportunity. Again, stop loss of 118 pips. Being in sync with the market completely got you to that take profit. What I'm saying, guys, is this. If you're going to remain in the Forex market, and you're going to be content with trading Forex, you have to learn how to be in sync with the market. You have to learn how to read market structure, pan out to the larger time frames. Even if you're a day trader, even if you're trading the smaller time frames, remember guys, the safest trades, the best trades that you can take will always be in total alignment with the larger time frames. Of course, you can win a lot of trades trading counterproductive or pullbacks in the market, but the most successful, higher probability trades will be in alignment with the larger time frames. Thus, you will be in sync with the market. Have a good one.